What's up, guys? Welcome to the channel. My name is Nick, and guys, this is going to be a great episode today. There's going to be a lot of value. I'm going to be teaching you guys how to pick a dividend stock, both the quantitative, the number side, and the qualitative side, as well as I'm going to show you guys when to sell a stock. What's the best time to just get rid of that stock and forget about it. But if you guys noticed today in the stock market, the S&P 500 was down 0.97%. And as you can see, my portfolio, I'm down quite a bit, almost $345, 0.78%. So my portfolio actually went down less than the overall market. And yeah, as you guys can see, starting value for today, 44,431, ended just above 44,000. And if you guys notice, from the last video, my portfolio value actually went up, and I'll go over that next time, or not next. I'll go over that in a couple minutes, because as you can see, my weekly, I'm up $505 for the week. That is completely wrong, and I'll go over that in a minute. But first, guys, like I said, we're going to be going over how to pick dividend stocks. But before I show you my portfolio update, I want to show you guys some important dates when it comes to dividend stocks. And we're just going to look at Costco real quick. We're going to hit dividends. So yeah, I'm on the website seekingalpha.com. This is a great website for, doing your research when it comes to stocks. This is what I'm going to be using to show you guys how to pick dividend stocks. But first, let's just review Costco real quick. Dividend yield of 0.65%. That's a very low yield. However, as we can see right here, the 5-year growth rate, also called the CAGR, it's 11.9%, almost 12%. So that means every year for the past 5 years, Costco has been increasing their dividend by around 12%. I think last year they increased it by 12.9 or 12.7%. And another major number to look at when you're researching dividend stocks is the payout ratio. So as you can see, it's almost 25%, which that is very good because for every $1 Costco earns, they're only giving out a quarter. So they have plenty of room to continue growing that dividend and increasing that already amazing dividend CAGR. But now let's go to these dates over here. And these are the 4 most important dates when it comes to dividend investing. Now they do have them a little bit out of order. The first date we're going to look at is the declare date or the declaration date. Now this is when the company announces that they're going to be paying a dividend. And they just say, hey guys, we're going to be paying a dividend soon. And then the next number, and then they tell you that they're going to pay that dividend. Well, they're going to pay it on the payout date, but the ex-dividend date is the most important number after the declare date. And what the ex-dividend date means is that if you hold the stock, if you own the stock on this date, 10/28, you will receive a dividend on the payout date. Now, if you buy the stock on the ex-dividend date, you will not receive a dividend. Now, if you guys remember, I think it was in the first episode, I bought Devo stock the day before the ex-dividend date, and I sold it the day after the ex-dividend date, and I still received a dividend. So the next date is the record date. That's not as important. That's more the business side when it comes to accounting, the financial stuff. But then the final date is, my favorite date, the payout date. And so guys, now I'm going to go back to M1 Finance and I'm going to show you guys why that's important, those dates I just went over with you. So let's go to my activity feed and let's look at the last week. So on January 10th, I deposited $125, and I also had 7 buys. So it looks like I bought a little bit of MasterCard, Q Yield, Texas Instruments, Home Depot, and American Waterworks. Oh, and Nusi and Jeppy. All right. And then I also received a dividend from FRT, $12.13, and Stag, $5.28. So going back to what I showed you, this right here on my activity feed is the payout date. And looks like on January 18th, I deposited my weekly $125, and I had 6 buys of Nusi, Home Depot, Q Yield, Johnson & Johnson, American Waterworks, and Jeppy. So all good pickups right there. And now, as I was telling you guys earlier, my portfolio jumped up in value from 43,000 to 44,000, and that's because I finally got FRT back into my portfolio. As you guys can see it right there, $1,400. And how I received my FRT stock again was I had to email M1 Finance support just so they could bring the stock back. And that's why it's showing, yeah, nothing on the weekly return. It's kind of, everything's kind of screwed up. But what I wanted to show you guys was the monthly. And as you can see, I have earned dividends of $12.13. So this would be the ex-dividend date. Whenever the ex-dividend date passes, or whenever we hit that date, that's when M1 Finance shows that to me on the earned dividends. And like I said, I received $12.13 off 11.33 shares. And I also received a dividend from Stag, $5.28 off 43.69 shares. It's a lot of shares. So now let's actually go back to my main portfolio. Show you guys, look at that, $235 in earned dividends that I held the stock through the ex-dividend date. Now I'm just waiting for it to show up in my activity feed for the payout date. All right, guys, let's go check the graph real quick before I show you guys how to research dividend stocks. So I added those dividends, and as you can see, I've got $161.62. This number, or already for the month of January, this number right here is the sum of January, February, and March, the first quarter of the year. And the $53.87 is my average dividends for the first quarter, the first 3 months of the year. And something I do want to show you guys is if I go ahead and hit that, my January dividends, and I add 21.73 for Gladstone and 7.68 for LTC. These are my 2 end of the month REITs. You guys can see that I'm at $191 for January, and that's not even considering Nusi, which Nusi always pays at the end of the year, at the end of the month. So let's just look at Nusi real quick, and we're going to go to activity feed. Yeah, let's just show everything. Last month I received on the 27th an $8.36 dividend, and that was before a 600, almost 620, 46, 76, and $43 buy-in to the stock. So let's see, it'll show me how many, 22 shares on the 30th, plus 1.6, plus 2.87, plus 1.64. So that is a lot of shares. And I expect to have a very good Nusi dividend. It'll be a juicy Nusi dividend. and I should hit over $200 a month in the first month of the year. That'll be a record. That'll be breaking the next $100 barrier. So I'm excited for that. And of course, is because Q Yield gave me that $58 dividend. But now, guys, let's go into researching how to pick a dividend stock, or what I look for when I'm choosing dividend stocks. And once again, we are on Seeking Alpha. So guys, I'm going to give you an example of a stock that I would not choose. Real quick, as you can see, the Dow Jones down 0.96%, S&P 0.97%, NASDAQ 1.15%. So my stock portfolio, as I said, down 0.78%. Just owning those solid blue chip stocks protects my portfolio from the entire downturn of the market. And that's really what I'm a dividend growth investor. I like the boring blue chip stocks that give me steady growth and consistent and constant cash flow. So let's look at an example of a stock that I wouldn't choose as a dividend company. So we have Ford Motor Company, 22.45 share. As you guys can see, it's actually had a great run up, 148%. I did not know Ford grew that much in the last year. But I remember when it was under $10. We were looking at the 52-week range, 10.19 to 25.87. That is ridiculous. I remember when it was $8. We got EPS of 1.9, of low PE ratio of 12.85. That's pretty good. Dividend yield of 1.64%. Could have sworn before the dividend was a lot higher, but let's actually go into hit the dividends tab, and we're gonna go to dividend history, and you guys can see that big gap, but let's go to the max. And as you guys can see, Ford started off with a relatively high dividend that they were increasing over the years. And then it looks like around the dot-com bubble, they just started dropping their dividend, and then they dropped it again and held it steady for, looks like, almost 4 or 5 years. Dropped it again during the financial crash. Had no dividend from 2006 to 2012. So it looks like about 5.5 years of no dividend. Then they brought it back at 5 cents, a lot lower than the 27 when they first started. And they slowly increased it. Looks like they gave out a special dividend and then held steady, no increases. And then after the pandemic and the March crash, their dividend disappeared. And then in 2021, it looks like they just started bringing their dividend back. So guys, just based on this chart, I wouldn't buy Ford as a dividend company because they're not reliable. One, they're always decreasing their dividend, or they're holding steady and then they decrease and then they fall off the face of the earth, completely stop paying out for years at a time. And then as you see, they come back and then they don't increase it for years, and then they completely cut the dividend. So that's a good example of why I wouldn't buy Ford. But let's dig a little bit more. Let's go to the peers and dig more into the numbers while we're still doing the quantitative side. Maybe you don't want to buy Ford just for dividends. So I'm actually going to show you guys how to research these stocks, just to research a good stock in general. So this is their peers. I'm really not looking at the other companies. This tab, the peers tab, gives a great overview of everything about the company. 100 billion market cap. Not really worried about the trading side. If we look at not really about the return either. So this is what I'm looking at. Dividend yield. Yeah, as we saw, 1.64%. course, they have no dividend growth rate. Payout ratio is what I was looking for too. And for some reason, it's not showing up. Here we are. Their growth rate is atrocious. It's in the negatives and high negatives. And once again, consecutive years of dividend growth is 0. So it's not a good dividend growth company, even though it's had a dividend before in the past. So it's actually has a pretty good low PE ratio. So that means that it could still be undervalued. Now, moving on, if we look at their revenue growth, it's only grown year over year by 2.83%. And they're actually negative in the 3-year and the 5-year. That's not something I want to look for in a dividend stock or any stock. And we're also looking at negative net income and negative earnings per share. They have one of the lower gross profit margins, 10%. But then again, Ford is a car company, probably spending a lot of money on inventory, advertising, and real estate for those large lots. And as far as these go, not really worried about this. Performance, income statement. So revenue, 134 billion. Net income, 2.87 billion. And balance sheet, this is what I want to look at. So we have total cash of 31.42 billion, total debt of 145 billion. Of course, once again, like I mentioned before, car companies hold a lot of debt. And this is a big number, net debt. So if Ford was to take their cash and use it all to pay off their debt, they would still have $114.46 billion in debt. That is not something that I would be comfortable with, especially for a company that decreases and cuts their dividend. Total debt to equity, off the charts, insane. Their current ratio is above 1. It's actually looking pretty good. And so that's pretty much it when it comes to what I'm looking for when I'm researching a stock as far as the quantitative side goes. Now, when we look at the qualitative nature of a stock, let's just look at Ford. So one, they're a car company. So what's going on with car companies right now? They're having a lot of trouble with the supply chain, with getting chips. As we've seen, like they're probably doing all right when it comes to used cars because they can sell used cars a lot. But really, there's a lot of new cars on these lots that they can't sell because they just don't have the chips. Another thing is car companies, they're very competitive and it's a very cyclical industry and it's just not consistent for me. You know, or if I compare, like maybe not a fair comparison, but if I compare something like Ford to Costco or Walmart, when we look at Costco and Walmart, I know that people have to go grocery shopping. So they're going to choose, Walmart, Sam's, or Costco. And of course, there's a lot of competitors, but basically what I'm trying to get to is you don't have to buy a new car. And you don't have to buy a car. It's not a necessity. Whereas you look at Costco and Walmart, they both have food products. They both have products from like Procter and Gamble and Johnson and Johnson that are in Unilever, stuff that's essential that you need, like other stuff from Colgate, like toothpaste, baby products, food, you name it. You have to go to these companies to buy those stocks. And even though they can be affected by supply chains, it's not going to be as bad as something that like a chip for Ford. So when I look, and another qualitative aspect you could look at Ford is they're getting into the electric vehicle market. They've got a lot of competition when it comes to Tesla. and other major companies like Toyota or GM also building electric vehicles. So it's a very tough industry. And so that's why I'm not really looking at Ford as a dividend stock or even a stock in general that I want to own. So now, guys, let me give you an example of a great dividend stock and a great company that I would own, possibly even if they didn't give out dividends. So we're going to look at Microsoft, which is also one of my favorite companies. And as we can see on the one, so it's 303.33 on the share price. 1 year return is 42%, but let's be transparent. The year to date, Microsoft is down 10%. Or I think that means it's a great time to buy. Especially, I plan on holding Microsoft for decades, maybe for my entire life. And we'll go over that in the qualitative side in a little bit. But I guess something I missed before is the analysis in the news. You can come down when you're on Seeking Alpha, you can come down here and read more about the stocks that you're researching. And guys, I can't stress this enough. Always research your stocks. Don't just follow me or anybody else, YouTuber, your friends, family. Don't just listen to them when it comes to stocks. Do your own research. So we got the 52-week range, 217 to 349. I think Microsoft, it'll probably continue to drop more as interest rates increase. But over the long haul, over a 10-year period, I imagine Microsoft will double, maybe even triple. Now, earnings per share, really good at $9. Now, their PE ratio, almost 33. It's a little high, but it's not that bad compared to before. Now, once again, they have a low dividend yield, but Microsoft has a high dividend CAGR. They have a high growth rate. So they're going to increase that dividend a lot. I think last year they increased it by 9.8%, almost 10, which is an amazing increase. I think anything 7% and above is fantastic. So now, yes, let's look at their dividend history. And let's go to the max. So guys, this is kind of hard to see, but I think it was right here. They had their first dividend, it looks like 2003. Then they got rid of it until later in 2003. And then they came back in 2004, and it looks like they gave a special dividend. But since then, since they gave that special dividend in 2004, they've just been slowly and steadily, let's go to the 10-year. They've just been slowly and steadily increasing their dividend. Guys, if you put a trend line on Microsoft, you would just see it just continue to go a diagonal line going up. And that's what we want to see when we're looking at our dividend stocks. So next, let's go to peers. And we're just looking at Microsoft. Now, when you guys are doing research for stocks, you can look at the peers and see what other companies in the industry are doing, and then compare. Maybe you thought you were going to buy Microsoft, but you end up buying Oracle. So let's go down. So I'm not worried about the trading or the return. So dividends, like I said, 0.82% yield. The payout ratio, 27.32%. That's a very low, great dividend payout ratio. And if we look at the 3-year, it's a solid 10%. 5-year, 9%. So those are great dividend payouts, are great dividend growth rates. 17 consecutive years. Now I'm just going to go to Oracle real quick because I noticed that they had higher growth rate, but don't be fooled by that because it's only 1 year. Now let's see what Oracle can do over a 10-year period or even over a 5-year period so we can get the full and real 5-year CAGR. So moving on, We saw the PE ratio. So that revenue growth per year over year, 19.81%. I like to see that number. 5-year revenue CAGR, 15.2. Net income also increasing a lot. Let's go down. 68% gross margin. Return on assets, 14%. The EBITDA also very high, looking very strong. Let's go skip that. So let's look at revenue, 176 billion. Net income, 67 billion. If we go over to their total cash, Microsoft has one of the highest cash balances. I think Apple beats them. About 130.58 billion. And then when you look at their total debt, 78.93 billion. And then let's look at net debt. If Microsoft was to use their cash to pay off their total debt, Microsoft would still have 51.65 billion, which is an amazing amount of money. And then we're looking at current ratio, 2.16, also very high, very good. And so far, so good. Just based off the numbers, I would buy Microsoft stock. And I knew I was going to forget this, but one other thing, we can look at the risk side, the beta. So the beta tells us the volatility of the stock, and anything above 1 means that the stock is volatile, and under 1, it means that the stock does not have a lot of volatility. So as we can see, 0.86 beta means Microsoft is not volatile. Then now let's talk about the qualitative side. So we looked at the qualitative side of Microsoft. We looked at the quantitative side, and everything checked out. Microsoft is a solid company, solid dividend growth company, solid company in general. So let's look at the qualitative side. What does Microsoft, what do they do? They're a hardware company. They have their subscription based when it comes to Microsoft Office Suite, Word, PowerPoint, Teams, Outlook. They have video games. Microsoft just recently bought Activision Blizzard, which I think is going to be a great move for them to start getting more into the gaming industry, dominating it even more. Maybe they can really compete with Sony and Nintendo and overtake them both. So we have Xbox Live, which is another subscription service. Then what I really like about the qualitative aspect of Microsoft is their cloud computing. That is where they're seeing insane growth. I know just a few years ago, Microsoft was like 13% on the market share, and Amazon was 52% when it came to market share for cloud computing. Just in the last year, Microsoft has increased their market share in cloud computing to about 1/3, about 31, 32. And that's actually, Amazon just sits just a percent higher than them. So now Microsoft, at this point, I haven't looked at the numbers, but Microsoft could be passing Amazon. So I just see Microsoft as an innovative company. They're hitting a lot of different industries. And another qualitative aspect, going back to Microsoft Office, I used Microsoft Office when I was in college, or Microsoft Suite, when I was in college and at work. So, and in my own personal life, I use it. So guys, that's 3 different aspects where we're using Microsoft products. Just imagine if my college and my workplace use Microsoft Suite, how many other businesses, how many other colleges are spending a ton of money to use Microsoft? So guys, that I'm gonna end the video here. Thank you guys for watching. Don't forget to like the video, comment down below what you think are great stocks. And guys, don't forget to hit the subscribe button.